Hey everyone, welcome to another edition of #AskRobCo with James Wild. Another good week. All good, James?
Yeah, really good. Thanks, Rob. How are you?
Yeah, really good, thanks. We've
Excellent.
got lots of data, lots of intel for you. We've got the budget review, which James is going to go into detail from. Hope you all had a good week. There's been so much happening out there, so much noise, so much happening on socials, lots of great interaction and engagement with all of you over the past week, which has been brilliant. Thank you so much. Let's go straight into the data because it has been busy, busy, busy. We are all working very hard, as all of you, and that's because there is a lot of happening in the industry. Let's go straight into the new instructions this week. Big number 348, really pushing to one of the highest weeks of new instructions this year. That is a reflection of what is happening in the market. Lots of activity, quarter four looking to close out in a really strong way, and new instructions are going up and at a very high level. Interesting one on the back of that is the second most under offers this year at 285. So on the back of a good solid month now of really good instruction levels, what we're seeing is the properties are going under offer, and that will creep through as the sales rates increase. So we've seen another increase in sales rates this week at 128, up on the previous 2 weeks. And as all those under offers get surveyed, goes into solicitors' hands and get ready for exchange and completion, you're going to see those sold figures go up. And a really interesting one this week is the amount of properties that have seen price reductions is the highest amount of the year. So that could be a clue and a trend to what we're seeing is that we've had a lot of volume on. Maybe a lot of people are looking to get very high prices for their property. Maybe they're not able to achieve or manage the expectations of the market with those figures, and they've dropped the price slightly, hence the reason this week the highest amount of price reductions in the entire year. What do you make of that, James?
Yeah, Rob, it's an interesting one. We've now got the pipeline of the new instructions, which are going to hopefully facilitate higher sales at the sustained levels we've seen. Also, like you say, second highest amount of under offer properties this week of the year. So that pipeline for the amount of sold transactions, we're hoping the next few weeks those are going to come to completion exchange, and they're going to be we're going to see those in the numbers rising. In terms of the price reductions, highest of the year we've seen so far. Obviously, that's going to be made up of a lot of people who possibly didn't have to sell but brought their properties onto the market at possibly a slightly sort of aspirational figure, possibly, and now they're just aligning that more so with the market. So that's further hopefully going to enable and facilitate some more sales and hopefully sort of under offers as we're seeing in the data.
What I love about this show and I love about the data is it's so live and it's so reflective of what's happening with us as a business. We've been super busy the last few weeks, and the trend of what the numbers and the data are telling us is a pure reflection of what our diaries look like. Valuations are busy. We've got lots of work, which means that the rest of the property chain, the conveyancers, the solicitors, the underwriters, the mortgage brokers, the agents are also all really busy, and I think we're in for a good few weeks.
Definitely. I think the market now has somewhat stabilised since that stamp duty holiday finished, the main holiday finishing at the end of June, and that's being sort of phased out completely at the end of September. So now I think the market is stabilising. We had a couple of quiet periods, a few quiet weeks post-June, Rob, didn't we? And now that the data is stabilising at that sort of 100 plus sales per week, new instructions weekly on a weekly basis have also stabilised.
Great, thank you, James. So it was the budget this week. What's the review, James? What are we sharing with everyone?
Well, the budget, it was an interesting budget from the Chancellor this week. I think the main thing to speak about is the business rate relief, which will be very welcomed by the high street retail here in the UK, which has obviously had an extremely tough 18 months or so during the pandemic. So shops, restaurants, bars, gyms in England, they're going to have up to 50% temporary cut in their business rates, up to a maximum of £110,000. If you take this in conjunction with small business rates relief, the Chancellor said that more than 90% of all retail, hospitality and leisure businesses will see a discount of at least 50% on their business rates, which is obviously going to enable some of those businesses, at the worst end of the spectrum, to keep trading, and those which are gathering a bit more pace and momentum to get back to the levels they were sort of pre-pandemic, and hopefully enable some of those businesses to move into more of a growth and expansion model, possibly.
Yeah, sounds like a good incentive, and let's hopefully see that positive in 2022.
That's it. There has been calls of some areas for a more sort of overhaul of the business rate system. I think in the meantime it's a welcome tax relief there, and we'll see if there's any sort of further news on that in the coming budgets, and how the high street really recovers during this next 6-month period. Also in the budget, we've got sort of a new sort of cladding tax being introduced by the Chancellor, and they're obviously trying to make back some of the government expenditure that they've put into the cladding. I think we're up to around £7 billion in government expenditure, sort of out of the sort of public coffers, to try and enable those domestic owner-occupiers, those people that have bought properties through Help to Buy or many of the other ways in which you purchase property. But they've obviously got to make that money back. So the UK developers are going to be somewhat helping to replenish and foot the bill for that. Also on the budget, we've got Brownfields site development, which is going to be encouraged more so in the planning framework here in the UK. It's reportedly going to facilitate 160,000 new homes in the UK. And this is something we've seen a lot in London over the past 10 to 20 years almost, Rob. We've seen many sort of regeneration of areas such as King's Cross. We've seen the gas holders redeveloped, a Brownfield site there. And most recently in the press, we've seen Battersea Power Station and the surrounding Brownfield sites developed there. And for the Olympics 2012, Stratford Olympic Village was largely Brownfield sites. So I think it's largely being built off possibly a model which has a proven track record of not only producing new homes but also regenerating areas and bringing them back to life almost.
Listen, I very much hope it's positive for the industry. I think the one area that everyone's been talking about this week has been the inflationary conditions that the economy is in, and the big question is, how will that affect homeowners? How will that affect mortgage rates moving forward? And will there be an increase in interest rates next year? And what will be the effect on that on both mortgages and the property market? Yeah,
I completely agree, Rob. There's a couple of things which sort of fed into that on the back of the budget. We've got stronger GDP growth forecasts. These have now been increased to 7.2% for 2021, and they've softened slightly to 5.5% in 2022, with the UK GDP expected to return to its pre-pandemic levels in early 2022. Now, this enhanced growth forecast will ease some of the inflationary pressure we've got currently in the UK as the economy grows, with hopefully a more medium-term solution being interest rates returning to their sort of historic normal levels, with them being at the record low of 0.1%. Since March 2020, it's completely unprecedented, and that's obviously going to have knock-on effects like we've seen with inflation rising. We're up at 3.1% for inflation as of last month, with analysts predicting that we're going to be above 4%, some analysts saying as much as 5% inflation for this year. So as we move into quarter four, that we'll be able to establish that in the coming months, how we sort of end the year of 2021.
And any other wider news to share this week?
That's it from in the property sector.
Brilliant. I think a really quick update. Everyone wanted to hear about the budget. We wanted to get you that information out there. The data that's telling us is that everyone is busy. There is lots of activity. The residential market is moving, and I think we're in for a very strong performance in November. And I think we're going to be relating all that back to you. So thank you all for listening. Thank you for all your support on all the socials. Super appreciative. Thanks for everyone listening on the podcast and on YouTube. I get so many messages. If I don't get back to you, I'm so sorry. I do everything I can to personally respond, and I really, really do appreciate everyone that's reaching out the whole time. It's so fulfilling, and it makes this and everything that James and I are doing so worthwhile. Have a great week, and we will see you all next week. Thank you, everyone. Thanks, James.
Thanks so much, everyone.